Hi folks, in this video, we're going to be talking about cash basis versus accrual basis in QuickBooks Online. And we're going to get pretty into the weeds in terms of how QuickBooks Online behaves when it comes to showing reports in cash basis or accrual basis based on the circumstances on how you apply payments. So we're going to get pretty nerdy. And if you are against that, then maybe this video is not for you. So watch something else. All right, let's get started. We got QuickBooks Online open. I'm just gonna run real quick a report, and we're gonna run a profit and loss report and a balance sheet report. And what I want to have is just have them open to make sure that we're looking at the exact same thing and we're kind of seeing the progress of everything we're doing in the profit and loss and the balance sheet at the same time. So I'm gonna do this fiscal year in this case, and I'm going to do total by month. So essentially, I'm just going to run a report. Actually, instead of doing this fiscal year, let me just do 3 months. So we'll do January through March, and you're going to see exactly why I'm doing this. And I'm basically going to have a profit and loss for 3 months, and you're going to kind of see the progress as we go. I'm going to duplicate this tab over here and do the balance sheet and do the exact same thing so we can follow along with the balance sheet as well. So I'm going to go into reports and then run into balance sheet. And this is a brand new, fresh, open QuickBooks file. The only thing that it has is $100,000 in the bank, just to kind of simplify everything. So we'll start with 12/31/2020, and then we'll do 03/31/2021, 03/31/2021, and then we'll do this by months and run the report again. So we got a balance sheet here that the only thing that is showing is $100,000 in the bank account throughout, no accounts receivable, no accounts payable. This report by default are on accrual, profit and loss, and balance sheet. And this is going to be our starting point. We're going to go back and continuously look at these reports to evaluate what we're doing every time we do something. So let's just set up these reports. We got a profit and loss, we got a balance sheet. Perfect. Now I'm going to go ahead and duplicate this tab over here and then just go into the QuickBooks homepage or the dashboard, and we're going to start creating some transactions. We're going to go step by step so we can kind of see what's going on and follow along. So I'm going to go to new, I'm going to go to invoice, and I'm going to create an invoice for customer A. So we'll just call it customer A and add the customer. And then for customer A, we're going to have an invoice on January 1st, 2021. And we're going to have this for $10,000. So simple, easy to follow. I'm going to click on save. I'm going to switch back to my profit and loss report. I'm going to refresh it. I'll just click on run report. And then essentially, let's do this for 3 months. So avoid seeing that much extra information. So we're looking at an accrual basis report. This invoice is not yet paid. It's an open balance, because I created the invoice essentially in January and still hasn't been paid. It is going to show up as a January income, and it's going to show up under accrual. If I switch this to cash and I click on run report, you're going to notice that no income will show, because cash will only show an invoice once it gets paid. So I'm going to go back to accrual one more time and click on run report. Okay, perfect. So what I'll do is go back to my invoices here, and then I'm just going to copy the invoice, and I'm going to create a second invoice now for February. Again, we're setting this whole thing up so you can kind of follow along. This one is for February. Same customer. Due date doesn't matter in the world of accrual and cash. What matters is the transaction date or the payment date. We're going to make this one $25,000. Save that. And then we're going to go back into a profit and loss. That's the balance sheet. Go back into profit and loss, click on run report. And now we see $10,000 in January, $25,000 in February, exactly what we're expecting to see. Go back to my invoice here. I'm going to duplicate it again, copy the invoice, and I'm going to create an invoice for for March. We already done February, and then we'll make this one $7,000. Okay. So then this way, when I click on save and I go back into my P&L and I click on refresh on an accrual basis report, I see the invoice for every single month reporting perfectly into my profit and loss, exactly what I'm expecting. If I switch this to cash, None of these are going to show up, 0, because none of these have been paid. Now, if I go into my invoice, I'm going to go ahead and open up the January invoice. In this case, I'm just going to open that up, and I'm going to go ahead and receive this payment in February. So I'm going to come in here and click on Receive Payment. I'll click on Receive Payment. I'm going to select a February 10th date, any date in February, and I'm going to receive it for $10,000, deposit it into my checking account, or it could be received into undeposited funds. Either one works. Just for illustration purposes, I'm going to put it into undeposited funds and then click on Save and Close. So I received the money. It hasn't gone to my bank yet. It's sitting in undeposited funds. But what happens when I go back to my cash basis profit and loss report and click on Run Report, I am going to see this $10,000 that were sold in January showing up in February because it's based on payment date. So the way QuickBooks functions is in a cash basis report, it will show the invoices based on when they were paid, not when they were originally issued. Extremely important concept, very important to understand. Now, I'm going to do this exact same thing, but this time I'm going to go partial. So I'm going to go into my invoice, which is, let's just go back to invoices here. And go back to invoices. And I'm going to go look at my February invoice for $25,000. And then what I'll do is I'm going to receive part of the invoice only, not the whole thing. I'm going to receive part of the invoice so we can show you how that works. So let me try that again because I kind of got frozen there. So I have my February invoice open. I'm going to go into receive payments and I'm going to receive it into two parts. I'm going to receive on February 25th. I'm going to receive only, let's say, $3,500 worth, and then click on Save and Close. Okay, I actually could have hit Save and New. Let me click on the New menu here, and then under Customers, click on Receive Payment. And then now in March, I'm going to go in a different date. On March 10th, I'm going to select my customer, and then I'm going to receive, let's say, $20,000. Of that, not the whole balance. I'm going to leave $1,500 open in there, and then click on Save and Close. It's going into undeposited funds. It doesn't matter which account it goes to. It's a received payment. It's an applied payment. It's going to behave the way we're expecting it to. So I'm going to go back into my profit and loss, click on Run Report, and notice that I have the payment I received in March showing up in March. I have the two payments I received in February. I'm going to open that up, which is the payment for $10,000 and $3,500 showing up in February. And this is because we are on a cash basis report. If I was to be in an accrual basis report and I click on Run, the payments don't matter. The only thing that matters is the invoice date. So accrual basis report will always show the invoice date on the original invoice date on that date on the report or the column if it's a month or whatever, regardless of whether or not it's been paid or not. So it's a really important concept. That's accrual versus cash. Now let's get into a little bit more hairy territory, which is what if things are done not in that sequential order where you receive a payment prior to the invoice date. So that's going to be very, very different. So I'm going to explain that. So I'm going to leave it in the cash basis report, leave it there. And then what I'm going to do is I'm going to go into QuickBooks. I'm going to receive a payment. I'm going to click on Receive Payment. And I'm going to receive a payment in January. So January 14th. It's like a prepayment essentially. But I'm going to receive it for an invoice that was dated in March. Okay. And then just to make the number really easy to identify, I'm going to receive 2222. Okay. So just a bunch of twos, 2,222 in January for a March dated invoice. So this is a little bit different. The timing is different. Now the payment's coming before the invoice. Now what happens in QuickBooks, I'm going to click on Run Report. What ends up happening is because QuickBooks up to January does not have an invoice to apply the payment to. In a cash basis report, QuickBooks creates this hidden account called Unapplied Cash Payment Income, which is designed to take a payment from a customer that's not been applied to an invoice within the same period or in the past. So it's basically making up a transaction, making up an income transaction for January to account for that payment coming in, even though there's no invoice to match the payment to. And then what happens is when March shows up, the sale itself gets recorded into the sales account, but then it reverses the unapplied cash payment. Very, very interesting concept. And you kind of have to play with it and experiment to see what happens. Now, I'm going to run the balance sheet report here, and I'm going to run it in, I think it's an accrual basis. Still click on run report, and notice that my accounts receivable, which is my open balances from invoices, this is the stuff that is varying. In an accrual basis report, this is going to vary based on invoice date and payment date. For example, I'm going to click on the January one so we can see how the number is being constructed. I will click on that, and then you will notice that I have an original invoice for $10,000, and then I have a payment for 2222, right? They both happen in January. Therefore, my accounts receivable is $7,778. I'm going to go back. Let's take a look at my February. We'll click on that, and then notice that I have my original invoice for $10,000, and then I have my two payments, $10,000 and $3,500, that came during that month. Therefore, the math of accounts receivable is the beginning balance that came from January plus the new $25,000 minus whatever payments were received. And then once I click on March, $6,278. That's the total outstanding balances from all my open invoices. I'm going to go ahead and click on that so we can see the history. And then I'm going to date this, go back a couple of months so we can see the entire history of my accounts receivable. So we see the positive numbers every time my accounts receivable goes up because I received an invoice, or I created an invoice. And my accounts receivable goes down every time I receive a payment. Regardless of the timing, QuickBooks will always keep track of that balance sheet accounts receivable account correctly. It's only that profit and loss cash basis that creates that special account. However, I'm going to go ahead and switch this balance sheet to cash basis for a second, just so you can kind of see what's going on. So now we're looking at a balance sheet in cash basis. I'm going to click on run report. And what you will notice is that we have this payment for 2222 that actually shows up in January when I receive the money. And that's correct. I need to be able to receive the money in January. So it's showing up there. That's money received. And then you see the other money I received in February, which is $15,722. Here we go. That's the money I received. And that can go into the bank. And then I see the other money that I received. But notice that there's absolutely no accounts receivable, because the way QuickBooks works is whenever you have a cash basis report, accounts receivable and accounts payable is completely, totally ignored. That way, it doesn't even show that. Now, the only exception to the rule would be in January, particularly in January. If you look at January here, there is a net income of 2222 because if you look at the profit and loss, QuickBooks is in fact recognizing that prepayment for January, that's for a future invoice in the cash basis report. Where when I hit accrual and I click on run report and I go back into my balance sheet, you will notice I'm going to do accrual in the balance sheet. I click on run report. Notice that the total amount that gets recognized as net income is essentially the whole invoice amounts. As the total amount that gets recognized, the whole invoice amounts. So that's why it's showing up there on the net income. Now I'm going to do one more thing, which throws some people off, but I think it's worth mentioning. I'm going to receive a payment for a customer that doesn't have any invoices at all. So I'm going to go receive payment. I'm going to select a new customer. We're going to select customer B. So basically, this is going to be an unapplied payment. I'm going to receive it in January, and I'll receive it for $5,000. Then I'm going to click Save and Close. So notice that there's no underlying invoice. It's just a payment sitting there with no underlying invoice. When I go into my balance sheet and I click on Run Report, one thing you will notice is that QuickBooks starts constructing some accounts receivable. Whoops, this is accrual basis. Let me switch back to cash. Hold on, Run Report. So what you see, you'll notice in the cash basis report, it's going to receive the payment, but there's no accounts receivable at all. We'll go back to the accrual version in a second. I'm going to go back to the profit and loss in cash basis, click on Run Report, and notice that QuickBooks still creates that unapplied cash payment income. However, notice that it never gets reversed the way the 2222 does get reversed. And the reason for that is because QuickBooks does not have that underlying invoice to potentially reverse that or apply that invoice to in a cash basis report. I'm going to click on run, leave it there for a second. And this is what I wanted to show you. So I'm going to go back in here. I'm going to create the invoice for that prepayment. So I'm going to go to customer B. I'm going to create that invoice, let's say for $4,000. Actually, that was $5,000. $5,000. And I'm going to receive it in February. So February 17th. Click on save. That invoice says, hey, we have applied an existing credit to the invoice. I'm going to click OK. Okay, that's because the payment is applied. So because the payment is applied, I go back into my cash basis P&L, click on run report, and then I'm essentially going to see the reversal when that invoice shows up. However, what if that payment it's unapplied? I'm going to click on that payment over here on the right hand side, and that lets me click on that, see the payment. Notice that little checkbox. That means the payment is applied. If I unapply that payment and click on save and close, okay, I'm going to save it as a credit. If I unapply the payment, save it as a credit again, that's the invoice, that's the payment, but it's currently unapplied. If I go to the balance sheet actually I'm going to go to the profit and loss and click on run report, you will notice that 5,000 goes away completely. And the reason why it goes away and it doesn't show up in February is because essentially the payment is not applied. So the way QuickBooks works is when you receive a payment, it's going to come into the books unapplied. Here we go. We got two payments there. It comes in unapplied because there's no invoice on it, and it puts it in this random account called unapplied cash payments income. And it's going to sit there until it gets applied. And you notice that we applied the one in March. It showed up. That reversed. Because the 5,000 is still sitting unapplied, the 5,000 is still sort of floating here. And it is until I make that application that 5,000 gets reversed. Again, we'll go back. Let's take a look at that invoice. Pull up the 5,000 invoice. I'm going to click here where it says receive payment. Okay, I already received the payment, so I'm not going to receive a new payment. What I'm going to do is I'm just going to apply it this time. So just hit the checkbox. I'm not receiving any new payments. Notice here on this side, I'm just applying it. The application date doesn't matter. What matters is the actual invoice date. And I'll prove that to you. If I apply this in March, for example, but the invoice date is February, when I click on save and close, and I go back into my profit and loss in cash basis, you will notice that reversal shows up when that future invoice is finally applied. So tons of moving parts, crazy stuff. If you're not paying attention to the way QuickBooks works and you're counting on these balance sheets and profit and loss and cash basis and not understanding what's happening behind the scenes, this kind of stuff will happen. Now I'm going to switch to accrual, and we're going to talk about expenses now. I'm going to switch to accrual on both expenses so we can now see the behavior on the expenses side. So I'm going to go into the balance sheet. I'm going to go back into QuickBooks, click on new, and now what I'm going to do is I'm going to create a bill. So a bill will be the counter invoice, right? It's accounts payable, is for expense, is for your liability. This is the stuff that you owe to your vendors. I'm going to create a new vendor. We're going to call it vendor X. And we'll do the same thing so we can kind of follow along. We're going to go in January and we'll pick a category here. Let's do contractors, and we'll make the January one $5,000. I'm going to click on save. I'm going to click on more, copy, so I can duplicate it really, really quick. Then I'm going to do one in February. This one will make it 7,500. Click on save. And then we're going to go to more, copy, duplicate it one more time. And then we're going to go into March, and create one for 11,890. So just numbers that we can easily see on the report. So we created 3 bills for 3 separate months. When I go look at my profit and loss in accrual basis and I click on run report, I can see now my expenditure gets accrued my expenses. If I switch this to cash basis and click on run report, none of those bills show up as expenses. Same exact behavior as the sales side. If I don't have a payment, underlying payment, that's going to not show up in a cash basis report. I'm going to go back into accrual, click on run report. And what I'll do is I'm now going to pay one of these bills. So I'm going to go into new, and then I'm going to go to pay bills, and then I'm going to pay the January bill in February. So I'm going to select a February date. I'm going to pick my January bill for $5,000, and I'll partial pay it just for fun. So only $4,000. I'm paying $4,000 for a $5,000 January bill during February. So I'm going to go ahead and click on Save and Close. And then I'm going to go back into my profit and loss, click on Run Report. Because it's accrual basis, none of the numbers change. Same exact numbers as before. When I switch to cash and I click on Run Report, you will notice that only the $4,000 one shows up on the date, on the month that it was actually paid, even though that's for a January bill. Now we're going to do something similar. I'm going to go ahead and go to Pay Bills, and I'm going to pay the bill ahead of time. So I'm going to pay a bill during January for a March bill, and we'll pay, let's say, $8,000. So during January, I'm paying a bill that has a date of March. So we'll click on Save and Close. And then we'll go back to Profit and Loss, click on Run Report. In a cash basis report, we now get the counter unapplied cash payment income. We get the unapplied cash bill payment expense. Here's $8,000 being recognized the day I pay the bill, but not necessarily apply it. And then once the application shows up, which is the date of the original bill, it gets applied to the correct account contractors, and it reverses that unapplied cash payment. With the balance sheet, only thing you need to know, it's on an accrual basis. Click on Run Report. You're going to see my accounts payable. In this case, starts with negative $3,000. Again, that's because we had that prepayment. So I'm going to click on that to show you. That negative $3,000 is the positive $5,000 bill, and then the $8,000 payment that showed up later. If I actually click on that payment and I put a February date on it, I'm going to go back and hit Save and Close. Essentially what I'm doing is I'm changing the date of the payment. So I start my accounts payable with the equal amount of the outstanding bill, which is $5,000. Then during February, I know I created a bill. My bill was for $7,500, but then we have a payment for $8,000 that belongs to a March bill, by the way, which is fine. And then we have another payment for $4,000. So naturally, you see the balance there, how my accounts payable ends up at $500. And then I'm going to click back. And then when I look at my March, is $12,380, which if I click on it and then I click on all dates, I can see the entire history of how we got there. And essentially, I'm going to click back. Essentially, let's say I'm going to pay off all my bills in March. This is going to end up at a 0. So I'm going to come back into QuickBooks, go to New, and go to Pay Bills. And then in March, we'll select March here. I'm going to go ahead and select Pay All My Bills, which is $12,390 out of my checking account. Click on Save and Close. And then we're going to go back into our balance sheet. Click on Refresh. You will notice that now in accrual basis, my accounts payable ended up at 0. So it had some dollar values throughout the month as I was entering bills and paying bills. I paid it off. I paid off all my bills. So I have nothing in accounts payable. If I switch that balance sheet to cash, just so you can see, at no point in time, you're going to see any accounts receivable or any accounts payable. Now, the reason why it was important for me to make this video is because a lot of people are used to using QuickBooks Desktop, and QuickBooks Desktop actually behaves differently. QuickBooks Desktop creates negative balance sheet items, negative accounts receivable, negative accounts payable, and that throws people off. So as much criticism that QuickBooks Online gets for doing this, they've essentially fixed a big issue that we had when running cash basis reports, creating all sorts of negative accounts receivable and accounts payable. So as much as I hated this at the beginning, because I don't like phantom accounts being created and QuickBooks entering numbers there that I'm not used to, I actually appreciate the mechanism that QuickBooks Online has for managing accounts receivable, accounts payable in a cash basis when these payments are not being applied. Whew, that's a tough one. As a bonus, I'm going to add one more bonus just because it's like a super fun. This is super advanced. I'm going to show you an invoice that actually contains a negative item that goes on the balance sheet. I'm going to show you that's like super crazy, super advanced type of stuff. We're going to kind of see how that works. So I'm going to leave it here in a accrual basis report. Let's leave that accrual basis report. I'm going to go back in here. I'm going to create a new invoice, and I'm going to create an invoice for customer B. And let's do January. During January, I'm going to make an invoice for, let's say, $100,000. But what I'll also do, I'm going to click on save. What I'll also do is I'm going to create a new item. So I'm going to create a brand new item. We're going to call this item, let's call it retainer. Retainer. And then this is going to go into a balance sheet account, which I don't think I have here yet. Okay, I don't have it. So I'm going to go back and fix that in a second. I'm going to put it here on retained earnings for now. Click on save and close. Then I'm going to save and, we can save and close the invoice for now. I'm going to go into the chart of accounts. Okay, and I'll explain the purpose of this in a second. But I'm going to create a new account, and we're going to call it a other current liability. We're going to call it retainer. Retainer. Let's see if we have a detail type that would make sense. We don't. So we'll just keep it as other current liability, other current liability, other current liability, and call it retainer. Okay, I'm going to click save and close. Chart of accounts is done. Let's go back into, let's go back into the item. So let's go back into products and services. Let's go to our retainer item and change that to not retained earnings, but retainer, other current liabilities. And then I'm going to click save and close. Click on this little checkbox so it updates past transactions. Save and close. Beautiful. So now I'm going to go back and open my invoice. And now what I'll do is I'm going to invoice my client, but they are going to retain me, let's say 5%. So we'll have negative 5,000. So the invoice release for 95,000. Now, thinking about this, that should be an other current asset, not an other current liability. We'll go back to that in a second. Let me run my balance sheet in accrual basis and click on run report for a second. So we have an increase in accounts receivable, which comes from that $10,000, $100,000 invoice. And now we have this retainer. That should really be an asset. So let me go back to that and fix that just because I rushed the example. So I'm going to change that, edit that, and put that under other current asset. And I'm going to call it customer retainer. Okay, this is actually, so to explain kind of what this is, sometimes in construction, this happens where contractually you get to invoice your client, but your client gets to retain a percentage of the invoice until the order is completed or the building is built or the approval for the construction is granted or whatever. So basically we have this amount that our customers are retaining from us, and that was kind of the purpose. Now in an accrual basis report, this reports beautifully. As a matter of fact, what I'm going to do is I'm going to take this invoice and I'm going to bring it back. I'm going to bring it back to December just to make it a little bit easier to read. Bring that back to December and go back. So now in my balance sheet, I see my accounts receivable for 95,000 and the retainer for 100,000. The sum of the two is the 100,000. If I do a cash basis report and click on run, you will notice that this doesn't show up at all. In the QuickBooks world, QuickBooks desktop world, this balance sheet items inside of an invoice used to cause all sorts of random behavior. This is something that they fixed in QuickBooks Online. Again, kind of a moot exercise to show this, because if you don't use QuickBooks Desktop, it's really not a big deal to you. But actually, I'm going to go back. I have this uncategorized income from before. I'm going to push this one back to November. That way, we're looking at a clean December only with that 100,000. So don't pay attention to the man behind the curtain. That's just me fixing something. So I'm going to look at my profit and loss here in accrual basis. All the 100,000 show up. If I put it on a cash basis and click on run report, none of it shows up, which is perfect. It's beautiful. In a QuickBooks Desktop scenario, you would actually see a portion of that being recognized, because QuickBooks essentially recognizes a balance sheet item as a paid invoice. In this case, QuickBooks does a really good job at avoiding this from happening. That being said, I'm going to show you one more thing, which is a credit memo. So I'm going to stay here on the cash basis report. I'm going to go to new, and I'm going to create a credit memo, and I'm going to date this credit memo on, let's do customer A, and let's do for the sales, let's do negative 9999. Okay, sorry, not negative. I didn't mean to do negative. I apologize. just a bunch of 9s. And I'm just doing that to like make it just really easy to read. So I'm doing a credit memo during February. Let's do March. March for 999. And then I'm going to click on Save and Close. Now, when I look at my balance sheet, I'm going to click on Run Report. In cash basis, this is not affecting my ARs at all. But if I go on accrual basis and click on Run Report, you're going to notice that now we see numbers are a little bit off. When I click on that, you're going to see the effects of the 999 credit memo because that's an unapplied credit memo. However, and this is where it gets a little bit interesting, I'm going to go back and apply. So right here, let's click on Run Report. I'm going to go ahead and apply that credit memo to the invoice. So you can kind of see what happens when I do that. So we're on cash basis. There's no 999 here or no evidence of a 999. I'm going to come back here and go to Receive Payment. Yes, it's Receive Payment. I'm going to go to Customer A. I notice that this might be a bad idea. Let's go to Customer B. Okay, so Customer B is the one that has the $95,000. So let me switch. It's not going to affect what we did already, but I'm going to switch the 999 to Customer B for a second, just so I can apply it to the right one. So I'm going to click on Save. Again, going back to my profit and loss, click on Run Report in cash basis. No evidence of that weird 999, at least not yet. Actually, let's take a look at what March looks like. Just make sure that's there. Oh, okay, so there it is. So in this report, I'm going to go back for a second. This report, which is a cash basis report, there is evidence of the 999. Why? Because in cash basis, credit memos get applied on the date of that of the transaction. So you basically get to see, because the credit memo is applying to an old invoice and is applying during March, you see the evidence of that in the cash basis report. But if I switch this to accrual, which is what I thought it was at the beginning, whoops, let's go back to our profit and loss. And this was, I believe it was December through March, and this would be by month. Run report. So in accrual basis report, you see the sale showing up in here in March, because that's the date, the creation date. When I go to cash and click on Run Report, you're going to see this $100 disappear. Click on Run Report, and now you're going to see all this income shifted, which is based on application. So it's a really important piece. What happens when a credit memo is created and it's applied, and when does it show up? The answer is if the invoice is in the past and the credit memo it's in the future. In a cash basis report, the income will show up on the credit memo date. Now, what if we do credit memo prior? So I'm going to go to New and go to Credit Memo, and then I'm going to create a credit memo for, let's say, January, and we're going to do 4 hours, and we're just going to do 1111 again to make it easy for it to show up. I'm going to click on Save and Close. Oh, I'm going to do Customer A, Save and Close. Okay, so we have this credit memo. I'm going to go back and open it to make sure the credit memo is not being applied. Okay, so this was applied automatically. So once I click on that and open it, this is applied to an invoice from February. So I'm just going to uncheck that and apply it from an invoice from March in this case. So we got a credit memo actually, I'm going to close that for a second. I confused myself on that. Let me click on the magnifying glass, click on the credit memo, and see when this payment is being applied. I'm going to click on that, and the payment's being applied to a February invoice for 1111. I'm going to unapply it and reapply it to March, but I'm going to make sure that it's the same 1111 because I don't want to mess this up, and I'm going to match it up with the credit memo down here. So essentially, I'm not receiving a new payment. I'm matching a credit memo from January through March. So the credit memo is in January, the invoice is in March, and I'm applying it. So I'm going to click on Save and where's my Save and New here? I don't know where my Save and Close is. So I'll close that, go back into my profit and loss in cash basis, run a report, and you have no evidence of the income being in January again, because the credit memo is dated in March. So when I click in this, I can see my 111 credit memo. Sorry, because the invoice is dated in March. So I see that the that the invoice is for March. That's being applied. But when I click on that invoice, even though it says March 1st, I'm going to click on that invoice. This invoice really is from, oh, whoops. I might have confused myself. Let me look at the credit memo. The credit memo itself is from January. So this was happening. The credit memo is from January. The invoice is from March. Because the credit memo is being applied to a future invoice, you're going to see it in a report as a March transaction. So that's why you see it there. When I click on accrual and click on run report, then you're going to see the 111 show up in January, which is the original date of the credit memo. So again, when you apply a payment, at that point, the transaction, underlying transaction, which is an invoice, is the one that takes over for reporting purposes. Only when you have a prepayment, in this case, you see this credit memo here, which is a negative. When you have a prepayment in which the invoice is dated in the future, that's only going to show up in the accrual basis report. When I click on cash and click on run, you will see no evidence of the 111 in here. The cash will modify the transaction to match the applied transaction. Oh man, I have a feeling that this video might have been more confusing than helpful. If it was, let me know. If it was helpful, if you got some value out of it, if you understand QuickBooks cash basis and accrual basis reports better, give me a thumbs up, put it in the comments. And if the video is garbage, it's crazy, it's hard to understand, let me know. Maybe I'll knock it down and redo it. For the time being, as long as we get good feedback, I'll keep the video up. Hopefully it was something that's valuable to you. Anyway, I'll see you on the next one.